Hey, good afternoon, everybody. This is Dennis Wilburn. I want to welcome you to today's session of how to make money trading stocks, options, and ETFs. This is a free service provided by Active Trend Trading every Friday. And I just want to say welcome. If you're joining us via Facebook or join us on our YouTube channel, we're really glad you're here. We're going to be taking a real quick look at what the indexes are doing and then seeing if anything may be popping up on the radar for trading next week. I want to basically just, again, thank you. Please feel free to share this information with anyone you would like. Basically, this is our free content. Our premium session starts at 12 noon California time for the last hour of the day, and it's called the final hour. So with no further ado, let's jump into today's session. Okay, again, good afternoon, everybody. This is Dennis Wilburn. I want to welcome you to the active, the how to make money trading stocks, options, and ETFs. I'm anticipating my son joining us. He's getting ready to go to Great Britain for some ministry work, and in a couple of weeks, and so he's not on board yet, but I want to welcome everybody. Yeah, Ian, you say, you know, my first time here. Yeah, this is our free session. I talk a little bit about some of the trades we've done for the week, but primarily I look towards our premium members to actually give the ins and outs of the actual trades that we've been doing over the past week. It's been a very interesting week, for sure, and so. I want to remind everybody that all materials we do present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is no indication of or promise of future performance. I love this quote by Dan Zenger where he basically says, you know, your job as a trader is to wait for the best opportunity. And that's what I've been spending a lot of time over the last couple of weeks doing. One, getting my trading psychology down, making some tweaks of my own approach to the market, but also for premium members, what I've been doing is refining some triggers based on our, 4 rules to enter, 6 rules to exit the active trend trading system, so that we can be providing you with, I think, a higher quality of entry and exit signals. So if you want to join around and trade with us, that's, it's not a recommendation, but it is basically people who do choose to trade with us and parallel trade with us. That's great. So our objective today is just basically timely, actionable intel review at the end of each week, seeking to clarify, simplify market decisions so wealth can be multiplied. Right now, as we get in and look at the individual charts for the indexes, are we experiencing a relief rally, or is there a little bit more to it? Clearly today's rally is kind of news driven, if you will. Here's where we sit through about 9 o'clock this morning Pacific time, up about 13.8% on active trend trading. Of course, this is divided into 3 different strategies. Our strategy 2 that we've been really focusing on, which is strategic compounding. Well, we've been focusing very directly on that. It's up about 90% for the year, and we're really pleased with what's going on there. And are going to be expanding that into the, with these new refined trigger alerts. I think it'll be expanded into all the other strategies we have. So let's take a real quick look at the markets. Oh, this is funny. What did I do with the chart? Here it is. Okay. Okay, here's what was going on. We had talked a little bit about the markets going down in this 2-step pattern that we see right here. And one of the things I'm really impressed with is how well the market followed the 2-step pattern from here down to this level, back up on a short recovery rally, and then a fall back down. These 2 areas on this chart, right here and right here, were almost equal. both in time and length. And they basically gave a really great prediction of when the market was going to turn around and fly higher. The expectation, of course, was, maybe not to fly quite this high. And I'm starting today's review with basically the strongest of the indexes right now. The strongest of the indexes is the S&P. The S&P has pushed almost all the way up to 1 ATR away from the 20-day moving average. Correction, 2 ATRs away from the moving average. Oftentimes that's a place where it will take a rest and pull back down. What we've got going on here, we've got approaching a resistance level. So it's interesting that resistance level is almost right at the level of 2 ATRs away from the mean, away from the 20-period moving average. Here's one of the things I wanted to show you when we were talking about this concept of, here we go. We're talking about the symmetry of this move here down. We start here, come on down to this low here, back up to this first swing high, the major swing high there. And as you can see, price action pushed just past the 100% extension on the daily chart and then reversed and started to move higher. Now, what's pushing the market today? The major thing that's pushing the market today is the potential, the jobs report. Crummy jobs report. Yeah, no tweets, yeah. Crummy job report. And the Fed looks like, hey, we may be looking at easing either in June or July. The next Fed meeting will be on the 19th of June. So we'll see how, they immediately went to work. The Fed, as the market kind of was falling down here, reached about a 7-8% move down, corrective move down on the S&P. And it's interesting how the Fed has started talking it back up, especially when the jobs report came out a little bit weaker than expected. And so right now we're pushing on down, and I just want to show you the two-step pattern. It worked exceptionally well. Now we'll start winding up, and here's what I'm looking at for the S&P. Hey, it's going to push on up here. I will be looking for where do the sellers come in. I think the sellers are going to come in anywhere from today's high up here to the around 290 level on the spiders. What about the Qs? Qs. Okay. Notice the difference. One, the Qs have basically come up and just pushed above the 50-day moving average. Now, it is a very good recovery back up to the upside. It made an extension all the way down here to the 1272 extension based on this symmetric move, two-step down. And I always find it very interesting how the indexes or how the price action just follows along very closely to what's going on in the what's going on with the identifying the levels of potential support and all that kind of stuff. Hold on just a second. I need to. I need to basically just welcome my son on board. Hey, Brandon, how are you doing?
I'm fine. How are you?
I'm doing well, son. And I'll be asking you for some comment here shortly. So as we view here, okay, a little bit weaker. Now, we do not have a reversal signal yet, but I'll be looking for the potential of a two-step. If we get basically a move up, then a retraction down, we set up a higher swing low. That would give us an upside, and then we can provide an upside target for the potential of what's going to take place from there. But very interesting, almost an exact. The 1272 extension from this prior move down was 169.29. The price on this candle, the low on that candle right there, was 169.27, so within 2 cents. Let's take a look at the Russell, IWM. Okay, what's missing from this equation with the Russell? I'll just leave it up here for a second. You guys tell me what's there we go. You tell me what's missing here. Yep, no volume. Oh, that was another thing. Yeah, good pickup, Eric, on the volume. The volume on both the NASDAQ and the S&P, while yes, the price action is moving high and looking very strong, volume isn't really supporting the move up. It's not really supporting the move up. And so here's what we can take a look at here is basically you've got all this congestion from the moving averages here. And I keep several moving average on it, but this is a spaghetti string right here. I've got the 34, I've got the 50, I've got the 200, I've got the 100, I've got the 200, all in line right there. We do have enough where we can do a little bit of a projection up from these lows. I'll go up to this high here, maybe. From these lows, there we go. Let's see if we can get a little bit of a two-step pattern going on here with the, so we kind of made a new high there, came back, actually made a lower low on an intraday basis, and this gives us a new projection to the upside. And what I find very interesting is look where the this is the 78% extension from this move. Look where it terminates, right at the 50-day moving average. Where does the 100% at 153? Right at the, I believe that's the 200-day moving average there. And so let's keep our eye on what's going on with the Russell. The Russell will tend to either lead us up or lead us down. And right now it's the dullest knife in the drawer, if you will, or the weakest of the indexes. And so that's why I'm keeping my eye on that, but that provides us some target, about 152.68 up to 153.87. We get up into that area, I'll be watching for some kind of reversal signal to basically, reverse and go on down. And then I would anticipate the other indexes following suit. Now, what are some of the things that could throw a monkey wrench into the works? Well, a couple of things could do that, and that would be the Fed. Let's say the Fed 2 weeks from now says, hey, we're going to go ahead and start lowering interest rates right now. That would probably give a boost to the market to send it skyrocketing. What are some of the other things? Let's say that we settle the deal with the China trade issues, and all of a sudden it's a big win for everybody on kind of stuff. That's another thing could drive the market higher. Let's say that what are some of the things that could drive it lower? Of course, these are all news-driven issues. It's not really talking to the internals of the markets themselves, and so we'll just keep an eye. Hey, it's got to get before the IWM can jump back up into a major uptrend. It's got to get back through this resistance. You see this on a weekly chart over here, and also back past this resistance here from the highs for the year. And see, it didn't even come close to reaching the highs from last year. So this is the weakest of the indexes. So Brandon, I know you've been watching what's been going on in the market. What are you seeing, or I know you're getting ready to go to Great Britain, but what are you seeing with regards to the markets?
I think your headline for the session was, mixed markets, and now you've covered the slides. I can't see.
Oh, I'm sorry.
Yeah, mixed markets, it makes sense because on a daily chart, it looks like we really missed an opportunity, but the thing had just dropped a lower low.
Yeah.
So the hindsight factor comes in. 4 days ago, there may have been an opportunity. It wasn't the strongest support level in when you were looking at it at the time.
Yeah, exactly.
But looking at it now on a weekly chart, okay, looks like we're going to finish the week with something like an engulfing almost type pattern, and that is significant for at least a potential short-term move. But again, for maps especially, what we're looking at is things that are more predictable and more just more reliable. And this is not I would not be surprised if we ended up back at the bottom of this two candle range next week.
So I don't know if we'll make it down next week, Brandon, but I agree. I'm
just saying I wouldn't be surprised.
Because
what's that?
No, go ahead.
And at that point, that may be, depending on what the indicators are telling us and what other information we have, that may be a better opportunity, a more reliable opportunity to take advantage of.
I agree. Because in reality, with this still being in a downtrend, my downside target for this current move is still down here at 136.
Right. And that's, if you look at it from a long-term perspective, this is the first, I guess you could count it as two, but we essentially on the weekly chart had a lower high, and we're just kind of retesting that from a long-term perspective.
Exactly. So anyway, hey, I want to just real quick go over something. If you're looking for something to trade, I'll throw this up here. One of the things I do for everyone as a free service is I put out the IBD running list on a weekly basis and put it on the website. Well, I've developed also a couple of scans. I know some of you were with me on the Wednesday night training session and are familiar and got to see some of these scans in the one scan that I'm working on right here, and this is basically a scan of my primary indicator which is the True Strength Index. And the way I've got this set up is basically I check it on a daily basis. And I've set it up, if you trade, think, or swim and would like to get a copy of this, please email me and I will send you a copy of this. Now, if you're a premium member, you should have already gotten your copies if you wanted to use them. I've modified it slightly, guys, just to let you know what I've done to it. Because I've modified it slightly because I've included that. Here's where I want it at the low, because that's where it's most reliable. Below the lower reversal zone at -42. I want to see take a look back for 5 trading periods or 5 bars. So in this case, this is a daily sort. So I'm looking for 5 bars. So I save that, get rid of it. I can also, I can also, what I can do is I can, once I do a scan, I can scan through the IBD, the updated IBD 50 running list. That's 150 plus stocks from IBD that have shown up on the IBD 50 list for the year. I can scan that, and it's going to tell me if any of them are setting up on a daily basis with TSI in that lower level. And has it been in the lower level for any time during the last 5 days? So I just punch here and do a real quick scan. And bingo, bango, look what pops up. Amazon, which is up $47 today. Comcast, GLW, I think that's, and then OLED. And the other cool thing about this particular sort is I can also save this as a watch list. And as long as I have, you know, is I don't even have to have this sort current or, you know, anything. All I do is update the watch list. I can save it as a watch list, say the running list watch list. As long as I save this as a watch list, it will automatically update, and no, it will automatically update whenever a stock on that list or an ETF on that list goes down below the negative 42 level. So it gives me, and it'll send me an email and say, hey, Dennis, it's there. Do something about it. And so, yeah, it's this True Strength Index, Brennan.
Sorry,
so,
I always confuse that.
And so anyway, I can save that as a watch list, and it gives me an automatic update. So if you want a copy of this particular sort, let me know. And again, you have to be a Thinkorswim member or Thinkorswim trade their platform to make it work properly. So, hey, let's take a real quick look at these. We've got Amazon. Let's see, you know, maybe one of these is worth trading going into next week, and then we'll call it a day. CM. I'm writing these down. OLED. And so Amazon. And the daily chart is over here on the left-hand side. And so what that was showing us was that within 5 days, we had basically the TSI right here, this upper level, was in the low reversal zone down below negative 42, which is a buy signal. Now, do we want to buy Amazon right now? No, because we're right up against resistance. But we can say, hey, I'm going to look at this later on in the week. So Amazon, it's no-go for right now, but it may shape up for something going in next week. Comcast, what's Comcast telling us? Okay, Comcast. Well, dadgummit. Get over there. So Comcast looking actually a little bit better. Still needs to push up back up through the 50 and take off from there. But from there, it's about got an 8 or 9% run all the way back up to the past highs. It does, well, this is a dividend period. And so it looks kind of interesting. Don't have a really solid setup on it yet, but it just turned positive. So Comcast looks pretty good, close to being in a buy zone. GLW, that's Corningware, I think. Yeah, haven't seen that ticker in a while. Again, okay. Came off a real low. It has been in a huge downtrend. What I'd be looking at on Corningware, since it is below the 50 and it's hitting up between the 8 and the 34, I'd be potentially looking for a short trade on Corning to go back down to the 20. You know, not a huge mover. And so then OLED. This looks interesting. Okay, OLED again, you know, as you can see, bounced off the 100-day moving average. We now have broken back up through the moving averages, and so we should find support and maintain support at the 8-day moving average and or the 20-day moving average. And so we could plan a trade around this. And so this is another good one to be looking at for next week. We are well past earnings. We can anticipate a move all the way back up to where? Back up into the, you know, about 167 for sure. Higher level from there would put us up at 171. Let's throw a fib on here to give us an extension, and that's from this swing high right here to that swing low right there. And that gives us, if this is a good bottom here, that puts us up at first target 169, second target at 170, right there, 174.95, third target at 183. So there's a couple of stocks for you to take a look at going into next week. Really interesting, and that's, well, just wait till we get to the final hour for premium members. At the top of the hour, we'll be talking a little bit more in detail about the things that I've been working on that are going to, help out with your trading going forward. I'm really, really pleased with it, and plan on moving forward very quickly. So, Brandon, you got anything else? Brandon? I may have lost him. It looks like he plugged in and came back down. Hey,
can you hear me now?
Okay, hey, yeah, I can hear you now.
Okay, the press the space bar to unmute yourself thing was not working, so.
Okay.
Plan best laid plans. No, I'm not sure if what you're referencing for that final hour stuff is the videos and the training that you've been preparing or not. But there is some exciting stuff coming down as just kind of improvements to the overall membership that everybody's going to get a part of, but will be a good reason to join in if you haven't already. And I'm sure we'll do a special once that's all finished up, but I'm not going to put a timeline on that because
okay, yeah,
we haven't scheduled that.
I have a lot of stuff, and if you are looking at becoming a active trend trading member, just stand by, because I'm going to be putting out a special quarterly membership. That's going to be at a discount from our regular $124.99, but that's going to be coming out this weekend. So just stand by for that. Hey, here's where we're sitting with our strategic compounding efforts this week. Down a little bit, about $89, but still on this strategy, we are up 90% for the year. So be pushing forward. Here's my target looking into next week. We will, I'll be looking to, hit that target and or get above it. Beyond was our earnings trade for the week, and we got whacked by it basically. But overall, our earning trades that we've done throughout this second quarter have generated $2,500 worth of profit. So, Brandon, you are, and I don't know if you're ready to talk about this, but you are also trading the strategic compounding weekly trades. Are you trading with that with the kids' college account, or what are you doing with it? How's it going?
Well, the college accounts, I need to work out whether those restrictions, because some of those trades may not be kosher in the Coverdell account, even though it's a great way to go. It's kind of like an IRA or kind of like a Roth IRA for college.
Okay.
But I'm just using a plain brokerage account, but it's a small account. I started with $2,600 in there,
yeah.
And the Beyond trade was a little painful because it wiped out half of what we made last month. But before the Beyond trade, that 2,600 had grown by almost over $900.
Wow.
So Beyond trade took out about half of that. So now we're even still up from 2,600 to 29 or just about 3,000 at this point.
Okay, and you've only been trading that for about a month now, right?
Right. So this week is a month. So out of 4 weeks, we were up almost 1,000, but then that one trade took us out pretty hard.
Okay.
So, but but we're still profitable. We're still up It ends up being about 2% per week, but 2% per week, you compound that out over a year, and I'm happy with that on a $2,600 account.
Cool.
So, and the goal to do that was basically to do my best to trade that according to the alerts that you're sending out, so that we can kind of reconfirm customer experience.
Yeah.
That if somebody is following along and trying to learn, that they would be able to have similar results. That's the reason. That's
the reason. Okay. And so Ian asked, how many trades do we do in Strategy 2 on a weekly basis? Basically, Ian, is I look at somewhere between 2 and 4 trades per week, and they're primarily option type trades, doing either directional options or spreads or that type of thing. I try to keep it very, very simple. Only on the stocks and ETFs that are already within our watch list. So they've already qualified as a good growth stock or a great ETF. So, hey, here's where we're looking. Season.
If I could just jump in there. Last week there were 4, I believe.
Okay.
And I think I entered 2 of them were on Thursday, and I was camping when they closed out.
Oh.
And those 2 trades made $600. So.
Okay. And again, the idea behind this is like Brandon's doing, is I want to be able to provide something for people who either large account or small account that just want to regrow their small account into a nice nest egg. That's my objective with this. And so, hey, real quick on NASDAQ seasonality. Normally we'd be looking at seasonality coming in June, where the NASDAQ would start to get a bid to the upside. We may be getting that. But because the NASDAQ kind of took off and did this, I would not be surprised to see us get a really, pretty good pullback in the June, July timeframe. And then we'll see what transpires from there. Again, I think it's probably going to be, what are the reports that continue to come from the economy and that type of thing. Also looking at Russell. Russell in June tends to just kind of, wish-wash around and kind of stuff all the way up until the end of September, into October, when it gets the NASDAQ, or correction, the Russell actually tends to get the best move from October through December. Remember, the Russell is the weakest of our entities. And then finally, hey, if you're looking for other presentations, I do a monthly BAM webinar meeting. The next one's coming up on that. BAM stands for Bay Area Moneymakers. It was an IBD group there in California, but it was an IBD. Well, before that, it was another kind of group. But anyway, we have kept that alive. Do webinars July 6th. I'll be doing mid-year adjustments and plan for the remainder of 2019. And then basically, here's our trading team for active trend trading. I'm here on the right, and that's my son, Brandon, who's on the other line here. There's myself and my lovely bride, or I should say Brandon's mom. And there's Brandon, his lovely bride, Sharon, and our 2 grandkids up in Boise, Idaho. So we work together very well. And I'm really glad Brandon's back on the team. So, hey, 2019 really is a year of completion, where people are going to be growing into becoming, better traders, master traders, if you will. So keep the egg growing, trade wisely, trade profitably. Premium members will be on at the top of the hour for the final hour, and we'll be looking to see if we have any trades going on. I think we may have something going on with Tesla. We'll see. So with no further ado, I'll basically say aloha, trade well, and prosper. Have a great weekend. If you have any questions, please drop me a line at dww@activetrendtrading.com. And with that, God bless everybody. Thanks for joining, Brandon.
You're welcome.